Good day and a warm welcome to today's earnings call of the Iute Group AS, following the publication of the first half-year figures of 2024. I am delighted to welcome the CEO Tarmo Sild and CFO Christel Kurwitz, who will speak in a moment and guide us through the presentation and the results. After the presentation, we will move on to a Q&A session in which you will be allowed to place your questions directly to the management. We're looking forward to the presentation, and with this, I hand over to you, Tarmo.
Thank you very much, Judith. Hi, Christel. Have you had a nice summer holiday?
Absolutely. The best one.
You had the best one. Well, I haven't had quite the summer holiday, maybe a few days here and there, because we have been busy. And I don't know why, but usually challenges come at the times most unexpected. So we have really had a busy summer in making money and making things to work even smoother. So let's go into the first half year summary. Most important for investors, obviously, is how safe is the money. I confirm that your money is safe, your money is working in the hands of customers, and the loan portfolio has been steadily expanding. Now we have reached 265 million euros, together with bank and non-bank businesses, where the growth has been coming from both of those directions. Both non-bank and bank have succeeded in increasing their loan portfolio despite of a challenging environment. And by challenging environment in general, we mean the continuously tightening regulations that are applicable to lending, regulations applicable to the APR caps, which limit the yield, but also the regulations which apply to how we can calculate the customer's income, and other provisions which basically are directed towards more responsible lending, more sustainable lending. But sometimes we also see that the regulations are not, perhaps they come from a perfect world and don't acknowledge the local economic realities, where a big part of the economy is still gray and not digitalized. So we have succeeded in growing the loan portfolio. Another positive aspect is that we have broken the trend. We have broke the trend of not succeeding to grow the performing customer base. The performing customer pool of Iute Group has grown during the first half at on average steady 1,000 customers per month, whereas the growth has increased during the second quarter. So this is positive. The customer growth mostly is attributable to non-bank, and we are very happy about it. So we have grown the customer pool in 4 countries. Now, as to the revenue, we also see the increase. The revenue has not increased faster than the assets or the loan portfolio. Actually, if you compare, you see that we have to risk with more money in loan portfolio to earn less as revenue. Here, of course, we should dig a bit deeper behind. As introduction, I just mentioned that the revenue has been growing in non-bank and has been in decline in Enerbank. And second remark, the revenue has been increasing in wallet and insurance services and in lending, just because the yields of the loan products have been steadily in decline. The revenues from lending in relative are also in decline. So whatever we have been giving away or withdrawing in lending, we have been gaining back with alternative revenue sources, which are quite technology intense, but also very interesting, and we see great future ahead. Looking at the EBITDA, adjusted EBITDA number is down, and that is mostly attributable to the relevant areas where EBITDA is made. The revenue has been in decline, and again I have to refer here especially to the Enerbank, where the previous party enjoyed by all Moldovan banks by putting their resources not into productive loan portfolio, but by lending money to the government or keeping money at the national bank at the overnight deposit at very good interest rates. This party is over, and now the race is on who learns to make business faster. And in this regard, I should also mention that Enerbank has made one progress, which we praise, and the progress is in increase of the loan portfolio by 24%, during 6 months of 2024. So we will see the fruits of that increase with some delay in the form of increased revenues, but that has been one step achieved. So thank you for that. Customer Performance Index, the metrics that we use to follow not only the loan quality, but also the OPEX to revenue ratio. This has been steady and a slight disappointment to us. We actually expected to start improving the CPI sooner. And as many of you know, our historic target is 90%. We want to see that 90% of all scheduled loan repayments are being made on time or with maximum 30 days delay. And for the ones who join our call first time, let me explain in a few sentences. The point is that we are very much cash flow oriented company, cash flow oriented group, everybody in the group. We want to see real money. And loan repayments made on time indicate not only good credit quality and good decisions made by us in crediting, in trusting our customers, but it also indicates the efficiency, the operational efficiency. Because by our thumb calculations, and I'm really not going into very much operational know-how, but as a thumb rule, a performing loan is at least 2 times cheaper to maintain than a loan which runs into delays. Just because performing loan can be originated in many cases fully automatically, no manual operations involved, except the operations by the customer herself. Whereas with a delayed loan, the disco starts, excuse my French. So there has to be additional operational effort into reminding, into maybe locating the customer, into finding out what the problem is, what the root source of the problem is, and how to solve it. So everything is very expensive. And if we talk about relatively small loan amounts, we talk a few €1,000 a piece, then the operational expense related to processing the delays makes the loan relatively expensive. So that's why also the CPI 30 is a very relevant indicator for us. It also indicates the operational efficiency. Right, and the last number to indicate is NPLs in net portfolio, where we have seen a decline, and non-performing loan share in net portfolio is now 4.7% versus 7% by year-end 2023. So the work is continuing. The loan portfolio has been increasing. Customer pool has been in increase. By the way, to the 1.1 million euros total customer pool, I also would like to make a statement. While we very much appreciate all the people who have turned to us and who have shared their data with us, and with many of them, we have also made into have gone into real business by lending money to them or keeping their money with us and letting them make payments, buy insurance, etc. We will switch our strategic metric from total customer pool to the number of active customers. So in future reports, you can expect a switch from the TCP, which by now is more than 1 million people, to the active pool, the people who transact with us every month on a regular basis. And the benchmark number that we should be looking at is more than 250,000. Good. So this is about our first half. As a little cherry on the tart, we also obtained the Fitch credit rating. So this was a massive breakthrough for our company in terms that we got our management framework, our work processes, our technology, how the whole big thing operates, assessed by a third party. And while it was obviously effort for the whole team to answer all the questions to introduce the business and let the independent third party to assess us, I should say that we didn't change anything in our modus operandi. So this is what we have right now, what our bond has right now, B-. And obviously, we continue improving us in our challenging operating markets. If we switch now to the markets, what do we see? We see that we have internal dynamics in the split of loan portfolios and in the split of revenues. we see that 30% of the loan portfolio is located into Albania, and Albania by now exceeds Iute Credit Albania by now exceeds Iute Credit Moldova by almost a quarter. And we also see a steady growth in Macedonia and in Bulgaria, so that the overall picture is getting more and more diversified. We also see that Enerbank's share in the loan portfolio is 29%. The bank has managed to keep its share in the loan portfolio just because it's accelerated with the increase of its own loan portfolio. If we now look at the total revenue side, then we see that actually the non-credit, so to speak, still pulls above its weight. So as compared to the portfolio, we see that the revenue we make is relatively higher in the non-credit and relatively lower in the bank. Eventually, we expect the bank to perform much better, but that remains subject to the skill and technological capabilities and the management to attract more customers, which of course is depending on the ability to apply and launch new technologies, digital technologies, and also to offer better customer experience. So in the big picture, what you see is that 70% of the loan portfolio is in the hands of non-credit, 30%, almost 30% in the hands of the bank. And in revenue term, 85% of the revenue is coming from the non-credit business, 15% from the bank. Country-wise allocation, the best one in the group in terms of the loan portfolio, also the EBITDA and total revenue, and also net profit for the first half remains Albania. But we have also seen improvements in Iute Credit Moldova. So thank you, Team Iute Moldova, for tackling the challenges and going through the headwinds. So we also see that the EBITDA is now in Moldova slightly more than in Macedonia. North Macedonia has made great improvement. It is clearly a money-making entity. We are happy to see it. And we also see that the net loan portfolio in Macedonia has grown and is now more than half of what we have in Moldova. Bulgaria continues to be ongoing challenge. We haven't resolved all our challenges as related to credit quality. So despite of the growth on its own is not the target unless we fix the quality. And if not all subsidiaries inside Iute Group don't perform well in terms of credit quality, then this obviously also affects the overall group's results. So we have challenges in Iute Credit Bulgaria, and as to Bosnia, I think this is the last time we displayed on the operational footprint. Iute Credit Bosnia is now in liquidation in the court. Its license has been withdrawn on the application by Iute Credit Bosnia itself. So the situation with regulator is clear and cut, and we are in orderly liquidation. So I think this is enough for the operational footprint. We look forward to your questions. And if we now switch to the revenue picture, do you want to take it over here, Crystal, or I continue and I take this one?
That one.
You want me to take it?
Yes.
Okay.
Yes,
Okay.
and
Okay.
the next
I do.
one.
Okay. I do it. I still do it. So now revenue split between quarters. And you see that it kind of looks flattish in terms of having 26.4 million in second quarter 23, and then 27 million in Q3 2023, then almost 27 in Q4, closer to 26 in Q1, and then above 27.3 in Q2 24. So it looks kind of flattish, but actually there is increased trend in it. If you focus on just the absolute number of 27.3 million, and if you focus on how it has been achieved, despite of the relative revenue decline in Enerbank, which actually in absolute terms, if we compare 6 months to 6 months, it amounts to almost 1.5 million euros. So despite of giving away at Enerbank minus 1.5 million euros in revenue, the group overall has gained And again, this is thanks to the efforts, especially thanks to the efforts in the non-bank side. If you look at the structure of the revenue, we see that the biggest change actually comes from the fees and incomes from other services, by which we refer to insurance and to wallet services. Even in non-bank, we are steadily aiming at close to 10% from the total revenues, close to 10% coming from processing payments and also helping customers to insure their various risks. Iute itself doesn't assume any risks. We are just intermediator. We are capitalizing our access to we are monetizing our access to the end customers and the interactions that we have with end customers. We have also succeeded, in order to grow the loan portfolio, we have succeeded to increase the loan payouts by 38%. So during first half of the year, we paid out 184 million euros. And this is really great success for the risk team and especially for the commercial team and also customer experience. Thank you. Thank you very much. For investors, one long-term trend, which I would also like to point out, and that really is long-term trend, it's continuous. We've been discussing it throughout the last 2 years, I think by now. It is the trend of decreasing yields on the loans. We think it's part of the sustainable course. Sustainable course in terms that if we want to increase the loan portfolios and make larger impact to our customers and make our customers financially stronger, the loan amounts have to increase. If the loan amounts increase, then obviously the repayment periods have also need to extend because customers' incomes are not increasing that fast in our target countries. And at the same time, the yields or the price of the loans have also need to decrease. So we are now at the point where the spot values of paid outs, weighted average, is about 37, APR 37. And we expect the trend to continue towards low 30s. But there, of course, another trend which is continuing is application of data science and more data points based on which we assess customer individual situations, individual risk levels, debt to income ratios. And we can also see increase in some segments, increase of loan pricing in some segments. And of course, we are actually very well on track with our set annual target of growth. We wanted to achieve 420 million euros balance sheet. As of now, it's close to 400 million, 6 months left. We believe we will make it. And also we are on tracks with the annual revenue target, despite the various challenges. The annual revenue target was 120 million euros. As of now, 54 is first half, but the revenue is expected to increase even further, along with increase of loan portfolio and with increases in wallet and insurance services. Loan repayment discipline, the CPI 30. While I already explained the importance of this metric in our business, if we look into the detail, we see that we have now a steady 86.4%. It is indeed 3.6% short of what we want to achieve to have better operational efficiencies and also eventually to reduce the credit losses. We need more time and patience to achieve 90. And the reason is that with the extended maturities, portfolio really is very insensitive to any progress made within 1 or 2 months. If we have, let's say, 24 months worth of different customers in the loan portfolio, then adding 1 month of new customers or new loans, even with excellent quality, will change the big picture relatively little. What I can comment on the CPI is that we have really achieved improvement in 3 countries, 3 non-bank Iute countries out of 4. And we have still a lot of work to do in country number 4, Bulgaria. Most of it is still on our own. So we are not blaming COVID, crisis, inflation, or anything else. It's just us. But we will fix it, I am sure. Right. I have now spoken quite long time and I still haven't heard any questions. I know questions will come in the end, but it becomes kind of lonely. So I think, Kristen, now you take over. It's yours.
Yes. So good morning from my side as well, and I will additionally explain some financial highlights. It's most of it already covered by Tarmo, but maybe some additional input. Yes, as you see, adjusted EBITDA 20.5 million euros, drop on a yearly basis by 11%. But to be also said out loud that at the non-bank side, adjusted EBITDA decreased by 2.7%, and at the same time at the bank side, close to 42%. As Tarmo explained, the biggest impact at bank side comes from government bonds, as the yield of government bonds during the first half 23 around 17%, and now only around 6%. Yes, at bank side, they managed to decrease interest cost by 6%, but unfortunately, still operational cost at bank side also increased by 3%. If we're talking about the non-bank side, then our interest income increased by 2%. Due to the increased level of payout, our capex increased only by 6%. As Tarmo already said, loan payout in amount of 145 million euros during the first half of 24. We also have to admit that, yes, at the non-bank, also operational costs increased by 5% and mainly due to the salary cost, as we hired quite a remarkable team members related to wallet and insurance revenues.
New talent coming on board.
Yes, exactly. And at the non-bank side, other income on a yearly basis increased by 35%, and mainly, as Tarmo already said, mainly to insurance and wallet revenues, because during the first half of 24, we recognized insurance revenues 1.4 million euros and also wallet revenues 1.4 million euros. Net loan portfolio, we ended up close to 266 million euros. As already said, really impressive increase during the second quarter of 24. And we are also glad that, yes, loan maturity, which is now already more than 27 months. Operating expenses already, as I said, increased consolidated basis, and both at the non-bank side and also at the bank side, mainly due to the personal cost at the non-bank side, and mainly due to the marketing cost, auditing cost, human resources cost at the bank side. Our net profit dropped on a yearly basis, yes, by 41%. But to be noted that additionally to the drop of interest income, also on a yearly basis, forex gain dropped by more than 60%. So moving further, as already said, total income close to 54 million euros, adjusted EBITDA 20.5 million euros. Year-on-year basis, total income increased by 3.4%, but if we adjust with government interest income from government bonds, then total income increased close to 7%. Cost to income ratio on consolidated basis, 43.8%. We are glad that at the Iute non-bank side, we were able to keep it under 40%, which is our aim to consolidated basis as well. But unfortunately, yes, at the non-bank side, cost to income ratio 68%, and that is something we have to deal. We know the situation. We already started to implement new core to non-bank side. So in the future, that is something to be decreased a lot. Net profit margin also 8%, which is not satisfying for us. But as we have increased a lot our loan portfolio, which is a basis for revenues in the future, we have increased our wallet and insurance revenues. And then we truly believe that during the whole 24, we are still able to see net profit margin between 10% to 15%. Capitalization ratio at the level of 26% and interest coverage ratio 1.5 due to the drop of adjusted EBITDA, as already explained. Net loan portfolio quality actually already covered by Tarmo as well. We are glad that yes, 3 countries except Bulgaria are improving the ratio of deposit portfolio, and we have already made steps to improve loan portfolio quality at Iute Bulgaria as well. Net NPL was 4.7%, at Iute non-bank side 6.6%, and at the bank side 0.4%. Our gross NPL 9.3%. And during the first half of 24, we recognized allowances in amount of 12.4 million euros, which means that year-on-year basis provisions increased by 10%. If we move further, then yes, we ended up with assets close to the 400 million euros, out of which close to 84% belongs to net loan portfolio and cash. Our cash balance at the end of June, 66 million euros, out of which 16 million euros belongs to Iute non-bank and 50 million belongs to non-bank side. We had total liabilities close to 330 million euros, out of which 314 million euros liabilities with interest. Regarding or during the first half 24, interest-bearing liabilities increased by 5.5%, but at the same time, net loan portfolio increased by 14.4%. So, as also Tarmo said, that we have created basis for future revenues with extremely high level of payout and with highest net loan portfolio and with increasing revenue stream from insurance and wallet. I truly believe that yes, we are able to keep our promise, and as I said also, we are aiming to see a net profit margin between 10 to 15%. So I will once again hand back to Tarmo, and yes, let's see and let's wait your questions.
What to add? Thank you, Kristel. Maybe to wrap up the big picture. Growth continues. Customer pool growth, assets growth, performing assets growth, revenue growth. Net profit number and net profit margin remains to be under pressure. We have to work with it. The pressure comes down to better management of credit quality. That's number one. And to better management of operating expenses, the bang for the buck. That's number two. We continue working in both directions very intensely. Sometimes results come slower than we initially expected, but eventually they will come because we are relentless. With this, I would finish, and really, Judith, do we have any questions?
Yes, we do. Thank you very much for your presentation and the dive into your numbers. We will now move on to the Q&A session. For a dynamic conversation, we kindly ask you to ask questions via audio line. To do so, please click on the raise your hand button. If you have dialed in by phone, please use the key combination *9 followed by *6. And if you do not have the possibility to speak freely today, please post your question in our chat box. And we already received the first hand up from Vatsal Shela. You should be able to speak now.
Yeah, hi, good morning.
Hello.
My question is more on the repayment side. Would you be able to elaborate how much is the debt repayment for the next 6 months, and do we see any challenge in refinancing that debt? Thank you.
Your question is referring to the group's outstanding bond, which has a redemption deadline in October 2026, if I understand correctly. And if it is so, then the answer is that the preparations to reshape the debt capital base of the group are on the way. Most likely, and that is a probability statement, not a promise, most likely we will issue a new debt instrument by end of first quarter 2025. That is most likely subject to very dynamic environment around us. And we have been historically very dynamic in our decision making. The preparations are on the way. Anticipating the question, what could be the next issue size, if there will be, then it will depend on two components. Component number one, the growth of Iute's portfolio, how well we succeed with our growth plans. And looking at the numbers and the surrounding environment right now, I think, and again, this is probability statement, not a promise, I think we will be aiming at fresh capital of more than 100 million euros. Component B is whether we will also, together with issue of new bonds, aim to refinance the existing bonds. That remains subject to further discussions with our anchor investors and on the prevailing market conditions. It is possible that we will also refinance all or part of the 2026 bond. And that, of course, will also depend on the decision of the bondholders. Our job is to make the best offer that we can, and then there will be the market response.
Thank you so much.
I'm so sorry, I just had one additional question. So I believe Mr. Amos said that there's some pressure on the NIM. So wanted to understand that this is more the cost of funds point of view, or it is more from the petition that we have to lower interest rates to be offered to the customer. Thank you.
We are looking again. It's a decision which has many moving parts. It's a process which has many moving parts. But you are right. You are right to point out that there are two main drivers. One is to secure the growth of the loan portfolio. So it is about engaging more capital, issuing more principal debt. And number two is to take advantage of whatever the prevailing interest rate environment is. Right now, it looks that the interest rates are going to decrease and the yield expectations of investors are going to decrease. We don't know, of course, what it will be in Q1, for instance, of 2025, but we will look at both of those variables, among other moving parts in this big picture.
Yeah.
Thank you so much, Vatsal. And we have a few more questions in our chat box. Here are the questions from Marcus. Number one, how are you prepared for the future interest income decrease?
That's a very good question. We are continuously working on it. It's a work in progress. I will not say it's only preparation, it's action. So you see it in the steady increase of revenues from other value streams. By value stream, that's our internal professional slang, but value stream means you can imagine a conveyor belt from which we release different products. So value stream, one value stream is wallet, all kind of payment services. And the second value stream is insurance intermediation, where customers buy insurance with our help. So you see the increase of revenues in absolute terms and also in relative terms as share of the total revenue, the increase of other value streams, the revenue of other value streams. That's number one. Number two, again, operational efficiency and better credit risk management. Maybe even not only better credit risk management, but we just have to adjust our risk thresholds and we can tolerate less defaults in future just because the loans will be cheaper to all customers who get it. So it's an ongoing process, and actually you can also see it in the quarter-to-quarter reports. If you compare not only the net profit, but you compare the evolution of the loan portfolio versus the revenues and the evolution of operating expenses to the revenue.
The second one is, how is your future profitability affected by lower ECB interest rates?
Oh, that question I should bounce back right to all investors. Will you change your expectations on the bond yield because the ECB interest rates are changing? So maybe it's a bit jokey to respond to a question with question, but that truly is the answer. I can only tell you what my opinion is. My opinion is that ECB rates will have effect, but it comes through the corner. It's not straightforward. It's around the corner, along with the overall economic situation, macroeconomic situation, whether the money, whether the capital is going to flow into the stocks, for instance, or more into bonds. If the stocks become suddenly more popular, but also stock prices increase, then maybe bonds will be more popular. In recent times, we see actually that the bonds have been giving to investors more stable, steady income as opposed to stocks. So there are so many moving parts. My guess is as good as yours.
And could you please give some insights to how you are hedged against losses on currency conversions?
Oh, that is very simple. The currency conversions have to be, or the FX losses have to be covered by the customers through the price of the loans. So if we charge enough and if the loans are repaid well enough, then we are able to cover the FX losses. And if we do bad business, then we have to blame only ourselves. People have also asked in the past, are there any FX hedging instruments on the market? And in one sentence answer is that insuring yourself against the FX losses or taking any hedge eventually is more expensive by our calculations. It's more expensive than just taking the loss straightforward if it comes. That is about 70% of my answer. There is also 30% of the answer, which is that to hedge the currency exchange losses, one has to assume liabilities in the same currency where the assets are generated. And that's why we have also among our liabilities the loans we take from local banks and from local investors in local currencies. So that is already not insignificant share of liabilities, which has been assumed by group in Moldovan lei, in Albanian lek, etc., etc.
Thank you, Tamu. Silver is asking, were you not accounting government bonds in Enger Bank's balance sheet as trading securities, as I don't see any mark-to-market gains from this yield contraction that has emerged? And your ECR is now at the covenant threshold level. What are your plans to improve it?
Question related to the accounting standards and how were the government bonds accounted in the group consolidated balance sheet. I leave it to Crystal. But what I can say about government bonds is that Moldovan capital market is not very developed by European standards. There are very limited market participants. As far as I know, government bonds are being bought only by local commercial banks. And if there is trades, then there is only trades between the local commercial banks, and it is rather limited liquidity market. So I would not call them exactly as investment grade securities. Now, as to what was the accounting inscription, perhaps Crystal, you can take this question. I cannot tell you by heart.
Yes, government bonds, if you look at the balance sheet, then underlying other financial investment are recognized government bonds as well.
Now the ECR question. Maybe you can elaborate a bit so that we can give the answer straight to the point.
Your ICR is now at the covenant threshold level. What are your plans to improve it, was the question. And Silver, maybe you can point it out.
ECR at covenant threshold level. I'm not sure I understand the question. Are we talking about the interest coverage ratio? Or we are talking, is it ICR or I just admit I do not understand the question.
Okay. It's about interest coverage ratio.
Interest coverage ratio. Okay, there is no government threshold. There is the bond terms and covenants threshold. And we are meeting the bond terms and conditions. And if we talk about the future manageability of this threshold, then obviously it all goes about looking at the OPEX and at the revenues. So revenues are progressing in non-bank part according to plan. In the bank part, we still have a lot of work to do. If we talk about OPEX, the same answer. I would also say that there is one very dynamic element in the ICR threshold, and that truly is the OPEX, because we have OPEX elements in the group which can be terminated in a snapshot right after this call, for instance. So I think that we are very well on track in keeping the covenants. The question is just that we are also greedy for the future, and we have to build the future. And that's why we have the talent on board, and we put money into places where we think more would be coming back to us.
Yeah, if I may only add, interest coverage ratio is calculated on consolidated basis, which means that basically, yes, government bond is, so to say, also just one component, because all in all, interest coverage ratio is adjusted EBITDA to interest cost. So, but it is just one component from the formula.
Thank you so much, Crystal. And the next question from Lev is, thank you for the presentation. Can you please elaborate a bit on liabilities maturing in 2024? Are these mainly bank deposits?
Yes, that's now high Lev. That's the question coming from Elering. So the liability structure of Iute Group, I don't have much significant to add to what is in the public reports. The liabilities roughly are split half and half. If you look at the Enerbank balance sheet, its size is 166 million euros, and there are close to 120 Enerbank customer deposits.
Deposits from customers at Enerbank side, 71 million euros, and deposits from
Current deposits is 36,
yes.
so we get to about 108 million, and the rest is equity. But you get the more than 100 million from Enerbank or in the Enerbank, and the rest obviously is then non-credit part of Iute Group.
And next question is from Silver. What has been the core problem for CPI 30 not improving the course of the year?
Yes, I can only add to what I already said before, that the CPI is really cut through of all the customers' performance, and it also includes the customers who already have defaulted. So the change comes really with a big time delay. Let me visualize it. Let's suppose that we have 10 customers who are having monthly repayments, and their loans eventually will mature, but it will be in about 2 years, 10 customers in total. And now let's suppose that the first customer defaults already in the very beginning, let's say tomorrow, which means that next month, if we look at the loan repayments, we see that the 9 customers are repaying on time, 1 customer has defaulted, no repayments, so CPI is 90. CPI remains now 90 for the remaining 2 years because of this one defaulted customer. The reason is that the expectation, our group expectation for repayment, is for the next 2 years, and obviously we have to count that the actual value versus expectation is 0, or in grand picture, 9 customers out of 10 throughout the next 2 years continue repayments, and CPI is 90. And that's the metric which you cannot change for the next 2 years. It is already on the table. You can change it only if you add a few more customers. Let's say that we add 1 customer to this picture, and that customer will be performing. So in future, we will see 11 customers, 11 repayments, 11 monthly repayments, and the one which already defaulted in the past still remains in the picture for 2 years. And the CPI, in the CPI view, we have now 10 out of 11 making repayments on time. 10 out of 11, by my count, is about 90, 91, 92%. So you see that the change is not significant, even if you continue adding good performing customers. CPI is very good metric to assess the overall portfolio quality, but its change is not very fast. In that terms, in that context, more relevant is to look at the early default rate or the default rate of freshly acquired customers. We are not publishing this data, but what I can tell you is that in most recent origination groups, the default rate is improving, and also the payment discipline overall of customers we have acquired recently is significantly better versus the customers we acquired 1-2 years ago.
Thank you so much. And the last question, any updates or new information on Macedonia solidarity tax? Could there be a similar contribution to be made this year as in Q4 2023?
There has been some public acknowledgement by Macedonian government that they should never do similar decisions in the future. And to the best of our radars, as much as we can see, we really do not expect any solidarity tax this year. As regards the past is paid and gone and also forgotten.
Thank you so much. And in the meantime, we have received no further questions. I will hold the room for a moment so you have the chance to post some more. And that is not the fact. So we therefore come to the end of today's earnings call. Thank you for joining, listening, and all your questions. A big thank you also to you, Tamu and Christel, for your presentation and the time you took to answer the questions. I wish you all a lovely remaining summer. And with this, I hand over again to Tamu for some final remarks.
Well, thank you, Judith. Thank you for your time, for your questions. I think that the timing of next investor calls will be slightly different because we see that we have more interest with significant weight from different time zones. And I would expect that our future investor calls may take place even in the late afternoon. But with that statement, thank you very much, everybody, and we go back to work.
Thank you from my side as well. Bye.